How do real estate investors avoid taxes? There's a big difference between tax evasion and tax avoidance, and real estate investors have found every loophole under the sun to avoid taxes. I'm a real estate entrepreneur. I make tons of money with my real estate, so I know all of the secrets that my CPA told me, and in this video, I'm gonna share them all with you. Let's go.
Noel. Yeah, she can fix that. If you gotta get it done, no, you need to do it better. Well, she can fix that. Yeah, she can fix that. Investment to get back, trying to get a big stack. She can fix that. Let's fix that.
In this video, I'm going to share with you a step-by-step process on how you can avoid taxes by using real estate. I'm going to share with you 3 easy ways that my CPA taught me to avoid taxes using real estate and how you can do it too, even if you're just getting started. And last but not least, I'm going to give you some major ways on how you can get funding for your real estate so that you're avoiding taxes and making even more money in the process. Real estate has been one of the #1 ways to avoid taxes in this real estate game. It is like the United States IRS has decided to make real estate investors their top priority. I don't know what it is, but there are so many loopholes and advantages to the tax system for investing in real estate. My accountant has shown me so many different ways to avoid paying taxes, to lower my tax liability, and to write off things that so many other people cannot even do. It is one of the best reasons why real estate is one of the #1 investments in America. Literally, more millionaires have been created through real estate than any other industrial investment combined. And one of those reasons is that you don't have to pay as much taxes when you are investing in real estate. So you can take advantage of all of those tax advantages today. #1, expenses. Real estate investors are able to write off so many different expenses that other businesses cannot. Literally everything that you're doing in your rental property, from painting to putting new carpeting to going to visit the people's property, the mileage on your cars, all of those different expenses are all tax deductible. Now, let me clearly state before I get into this video that Noel Randall is not an attorney or a tax professional. These are simply my opinions given to me from professionals that I have hired that I'm going to share with you. But again, I strongly recommend you getting with your own tax advisor before implementing any of the things that I'm saying in this video. Because there are so many expenses when it comes to real estate, there are so many expenses that you can deduct. Literally, not just talking about the mortgage or the mortgage interest. Obviously, that is a great thing that you can deduct. And so many people have just one home and they're used to deducting the mortgage interest. But being a real estate investor takes that to the next limit. You can take the mileage of driving to your properties to check on them, and you can use that as a tax deduction. A more important deduction is what I'm going to talk about in #2. #2, depreciation. Depreciation is like the holy grail gift from the IRS. Literally, let me explain to you how depreciation is defined, okay? Depreciation is listed as one of the most powerful tax benefits in real estate investing. This allows you to deduct a portion of the property's value each year as it wears down over time. So remember, real estate is actually going up in value over time. However, for tax purposes, you can depreciate the asset as it goes down in time. So this is an amazing thing. And by claiming depreciation, you can offset your rental income and significantly reduce your tax bill. This is literally what my accountant wrote to me, and that is one of the best things about real estate is the depreciation. It's funny because, like I said, I'm always telling you to invest in real estate because it appreciates in value. And almost everyone knows that statistically speaking, real estate goes up in value over time. However, for the tax system, you literally can depreciate the asset over time so that you can reduce your tax liability. This will reduce the income that you're receiving, and it reduces your overall tax bill. And when you combine it with all of the other expenses that you can write off, like painting the property, getting new carpet, visiting the property, and all of the different expenses that you have in maintaining that property, those are all write-offs as well as the depreciation. So you can end up writing off a lot of money on your pieces of real estate. And the more pieces of real estate you have, the more deductions, depreciation, and expenses you can write off. #3, leverage. Leverage is an amazing way to avoid taxes, and leverage means borrowing against the asset. So instead of just selling off your real estate as it goes up in value, so say for example, you buy a house for $200,000 and 2 years later it's worth $350,000. Well, instead of selling it, you would get something called capital gains taxes on that $150,000 using that example. Well, instead of actually selling it, you could keep that property and do a cash out refinance. Get that money in one case, you could take the whole $150,000 and take all the equity out of it, or you could refinance and get maybe just $100,000 out of it, and there is no taxes to be paid on that because it is not capital gains, nor is it considered income. So literally being able to leverage your properties and pull cash out of them is an amazing and easy way to avoid paying taxes on the actual equity. Additionally, you can use that money that you're pulling out for whatever it is that you want. You can use that equity to pay down other bills, pay down other expenses, or you could be really smart and use that money to acquire even more real estate by taking one piece of property and turning that into multiple pieces of property, which again will bring you more cash flow, bring you more appreciation, bring you more equity, and grow your personal wealth. Number 4, 1031 exchanges. 1031 exchanges are an amazing way to save money on taxes. A 1031 exchange is when you have a piece of investment property that you are going to exchange for another piece of investment property. So instead of, again, using the example that I said, where you have a property where you paid $100,000 for it and now it's worth $350,000. So instead of just selling it and receiving $150,000 cash in your hand, you can do what's called a 1031 exchange, and you could take that $150,000 and you can buy more rental properties with it. You can take $25,000 down and finance 3-4 more properties and take that $150,000 and put it towards 4 other rental properties and not have to pay taxes. This is what's called a 1031 exchange, and this is what you can do with investment properties. You literally can take one rental property, turn it into multiple rental properties, and not have to pay taxes on the amount of money that you made with that first rental properties. 1031 exchanges are an amazing gift from the IRS for real estate investors. Number 5, opportunity zones. Opportunity zones are designated from the city, the county, the state as areas of where they want you to develop. So for example, they will give you lots of tax subsidies, tax incentives, and tax benefits for you investing in an opportunity zone. So in almost every single state and almost every major metropolitan area, there is something called an opportunity zone. Let me explain. I just pulled up my phone and my accountant sent me what is defined as an opportunity zone. Let me tell you the definition. Opportunity zones. Investing in designated opportunity zones can provide substantial tax incentives, including deferred or reduced capital gains taxes and potential tax-free appreciation. Literally, they will put that into the law. And if you invest in certain places, you don't have to pay any taxes on the property going up in value because you are making it go up in value by renovating it and things like that. By directing your investments into these economically distressed areas, you can unlock valuable tax benefits while revitalizing communities. I absolutely love opportunity zones because in many cases, it is areas that are considered distressed. So it may be an area in the city that they're wanting to incentivize you to invest in. They want you to go into that area, buy those properties that are really dilapidated or they haven't been taken care of, and they give you all of these tax incentives to renovate those properties and revitalize that entire neighborhood. This is how the city, the county, and different states incentivize through the tax system, how they incentivize real estate investors to do great things and improve and revitalize communities. I absolutely love it, and it's a great benefit just for real estate investors. I have written 4 books that I want to give to you absolutely free. You just cover the shipping. My 4 books, Real Estate Millionaire Secrets, Business Millionaire Secrets, B&B Millionaire Secrets, and Turo Millionaire Secrets, has been helping my students make tons of money, and it shows you how to use business credit to combine it with other businesses and have a generational wealth for you and your family. Get all 4 of these books at noellsbookoffer.com. All 4 of my books, absolutely free, limited time only. You can get them and all you have to do is cover the shipping. And in many cases, you will even get a gift. Supplies are limited, so you need to go there right now. That's noellsbookoffer.com to get all 4 of your books. Remember, readers are leaders, and these books have been changing lives for months now, and it is time for you to get your copies. Again, that's noellsbookoffer.com. That's Noelle, Noelle with an S, book, BOOK, offer, OFFER.com. noellsbookoffer.com. Go right now, get all of these books. I will ship them to you immediately. You just cover the shipping. Again, I just want you to have all of the resources, all of the tools, and all of the knowledge that you need to be successful. This is Noelle. To your success.